Let's delve into the ETF market, but look at it in perspective. So let's do a little bit of a year in review with the man who has all of the data and has crunched all of the figures. Mark Montfort from Decision Inc. is joining us now live. Hey Mark, Happy New Year. Good to see you again. So if you had to pick the most interesting data point in terms of the ETF market through 2020, I know I'm putting you on the spot, what would it be?
So many places to choose from, but I would say the record-setting FUM and inflows that came into the market. So FUM being funds under management, we're now at just under 95 billion, so 94.4 billion in the market. We had record inflows this year. We had $33 billion worth of net inflows. So that's taking into account outflows and inflows. We're 33 billion up. That's a 145% increase on 2019. It was a record year for ETFs.
It looks as though too, looking at that chart correctly, that was sort of backloaded towards the end of the year. Is that correct?
Yeah, that's right. So what really helped there was Magellan's global fund listing on the ASX in November. But even if you take out the Magellan, the 13 billion that went into FUM for their three funds out of November and the earlier part of the year, even if you take that out, it's still 80 billion worth of FUM in the market. So it is still a record year when you consider that we're only at just over 60 billion at the end of 2019.
Okay, so if we talk about performance, what is the data telling us about performance through the year? Obviously we can talk March 23rd and what happened around that time.
Yeah.
But the pace and the speed of the recovery from there is noteworthy as well.
It's absolutely noteworthy. There was a big turnaround story. So last time I was on in November, December, talking about the November numbers, we saw that the triple A's did really well. So that was ACDC, a big name there for the battery space, and then after that it was ATEC and Asia. ATEC pipped all the others at the line. So when we got the December numbers in yesterday from the ASX, we saw that ATEC overtook in terms of total returns, which takes into account dividends and other payouts. So it takes not just the price, but it's the total return that you get from that ETF. So it came in at a shade under 54%, and that was the best of the bunch, followed by ACDC and Asia, and after that FANG. So it's a big technology kind of push from what we saw in 2020.
Yeah, Mark, ACDC comes up a lot on ausbiz. In fact, just in the last hour we were talking about it there. Talk to us though a bit about the actual different issuers. There's a lot of different issuers out there. Is any one that really stood out?
Yeah, in terms of if we just look at the absolute kind of returns and performance and not the number of ETFs that they provide, WCM with its quality fund was the best performer, but it only had one. So one of the other bits of analysis that I did was looking at anyone that has over 10 ETFs. So that's like ETF securities, beta shares, Vanguard, some of the bigger players. ETF securities actually did the best out of those at plus 13% in terms of the average returns across all of its funds.
What was the most traded ETF in 2020?
Well, people were a bit bearish. I think everyone was a little bit worried about what was going to happen in 2020, a lot of uncertainty and tumultuousness in the year. So the BBOZ, which is a short ETF. So if you're bearish, you might have a basket of just single stocks that you picked and then pick BBOZ to hedge that risk. And yeah, that was the most traded. So 4.8 million worth of trades overall in the market in 2020, much higher than in previous years, and BBOZ was the best out of the bunch.
But I guess in speaking to what many people use ETFs for, it's that overall exposure, because VAS was the second most traded, wasn't it?
Absolutely, yeah, that's right. So VAS and a couple of the other large index plays were the ones that were the most traded, yeah.
Now, Mark, I'm curious because, look, I've done a lot of work with the ETF industry over the years, and we are consistently told that Australia is, years and years and years behind markets in other developed countries, being Canada, the US, saying that we're only about 10% of where we could be, comparatively speaking. Has that comparison changed at all in the past year? How do we compare as a market size and interest overall?
Despite the growth that we've had, other countries have grown as well. The analysis that I've done has shown that there's now 1 trillion. It's probably USD, so we're not quite at 10%. We might be just a shade underneath that if you look into exchange rates. But we're still around, like if we're getting close to 100 billion and it's 1 trillion globally, we're still around that mark. So we've still got a way to go. Despite the improvements, it is good signs for what we're seeing here. You can see on screen there some of the overall highlights. But just looking at the Aussie markets, there was a lot of growth. We've still got some room to grow. People are much more interested in it now than ever before. So it was a record year. But I wouldn't say that we're tiny in comparison to other markets. It's just that everyone grew at the same time. So yeah.
Yeah, well, that's what happens, right? Especially when people are piling into the market. 2021, we'll see what happens. Mark, thanks for taking us through it, and no doubt we'll speak soon.
Great, thank you.